Welcome to the deep dive video. This video is the fourth video that I do each weekend. I have a daily video that I do, a weekly video, and an intermarket analysis video. And then with this last video, I go through all the charts, which are daily charts, and then I pick out those that I really didn't talk about this past week. The idea is to gain some insight even when the chart isn't necessarily telling us anything extreme. Sometimes we can get some good insight by looking at this. This is being prepared for Tuesday, May 30th. The first chart is a chart of the VIX. You can't see the VIX on this chart. It is invisible, but I have a 50-period exponential moving average plotted on this chart. What we're looking for is called the VIX range. During different phases of the market, the VIX will go to a higher range. Sometimes it'll shift to a lower range. If you go back from 2008 into 2011 or into 2012, we had a range of about 40 on the upside, coming down to a little bit under 20 on the downside. Then from 2012 up until the COVID plunge, we dropped down and had a range of about 20 on the upside to a little bit below 14 or 13 on the downside. Then after the COVID plunge, we went back up. We have a range between 27 and 28 on the upside and a little bit below 20 on the downside. This just gives us an idea of what is the VIX actually doing. There are static numbers that you can use to evaluate the VIX. Generally 12 or below, that means there's a lot of complacency. When we start to get above 20, that means that there's a lot of fear. Well, this shows that those static numbers aren't always really indicative of what's going on in the overall market. This next chart is also a VIX study where I plot a 9-period RSI. We're looking for extreme positive or negative readings. As of the time I post this, we're just about at the midpoint. We also look at the VIX on a daily basis and then compare it with the 3-month average of the VIX and then take a ratio. On top of that, I have a 50-period exponential moving average. We can see that the trend has been down for the VIX as there's not a lot of fear in the market. This next chart is where this measures the ratio between the VIX and the VIX of the VIX, which measures volatility. And overall, this is also showing that we are declining as far as volatility is concerned. Another look at fear inside the market is by looking at the equity put call ratio. As we've been going up, the one-day chart has been going down. Then I also plot a 5-period simple moving average showing that the equity put call ratio has been declining. In the daily videos, I have a longer term version of this chart, and we like to look at this for different signals that may be generated when the market has gone too far negative. Typically, this ratio will go down as the market is going up. Then we look at a really long-term 253-period simple moving average of the equity put call ratio. At the beginning of 2022, this really started to go up, but you can see right now it's starting to turn down slightly. We're wondering if we're seeing a shift in the market from being overall negative to back to positive. Now, we've been faked out before. It looked like it was turning down previously, only to turn and go back up. We'll have to see if this trend still continues. Another thing that's kind of interesting is going back to the all-time high and seeing where are we at. We're down 12.73% based on Friday's closed. And then over here on the right, I have a red line showing where we did close finally above the 4,200 level. We also have spent a lot of time around the 4,000 level, going above, going below. And so I just have a simple chart here with a line drawn right at 4,000. Technical alerts are put out by stockcharts.com. You don't have to be a member to go and see these. They're produced every day and they're automatically generated. They not only deal with the S&P, but all the major indexes. They also look at the different sectors inside of the market. We read this from the bottom up, where after the open on Friday, the tech sector set a new 52-week high. Then the NASDAQ went above 12.7. Eventually it went above 12.8 and then 12.9. Finally getting above 13,000. When they're blue like this, that's positive. When they're red, they are negative. And these are just generated throughout the day and kind of interesting to see what things are going on in the market. We also follow a number of different indexes. We have the Dow, the S&P, which is our main index, the NASDAQ 100, the mid caps and the small caps, and we can go to stockcharts.com and then rate them on a scale of 0 to 100. 100 being that they're very strong. The lower you get with the score, the more weak their technical picture is looking. Coming in first place is the QQQ, which represents the NASDAQ 100. It has a technical score right now of 98.1. In second place is the S&P 500 at 83.9. In third place is the Dow at 36.1. In fourth place are the mid caps at 29.2. We're seeing a lot of weakness in the mid caps and then in the small caps as well. But if you look under the surface and compare growth with value, we are seeing some strength. And then in last place, we have the small caps coming in at 23.3. Looking at some short-term charts, this is a short-term rainbow. It goes from 10 periods all the way up to 50 periods. And it looks kind of neat here and it's colorful. And sometimes we can get a bigger picture look at what is the short-term trend actually doing. Right now, we're above all the plotted moving averages. I haven't used this chart that much in 2022 because we're chopping all over the place. When this really helps us is when we're going in an overall either up or down direction and the moving averages are moving in the same general direction. We also look at a thing called the CMB Composite Index. I use this more like an oscillator, even though it's a standalone short-term trading system. The idea behind the system is a signal is generated when we cross above one line, and then it's confirmed when we cross above the other line. Where I use this as seeing more of an extreme positive or negative reading, right now we're not seeing anything all that extreme. I have been showing the double and triple exponential moving average 50 period in the videos a lot. Well, this is a shorter term moving average based on 20 periods, and we're well above both of the moving averages. So this confirms that our short term trend has switched back to positive. In the intermediate term, I use this as a way of determining, are we going up or down too far too fast? This can also be an area that you might consider for putting stop losses in or setting up different kinds of credit spreads. The dashed line in the middle is the midpoint. When we're above that, we're positive. When we're below, that's negative. We've been able to get above the 1 standard deviation and we're into the 2. When we start to look extreme is when we shoot up into the 3rd standard deviation. We also use the Connors RSI, which is just the same as a regular RSI, but it's calculated differently. We're looking for extreme positive or negative readings. When we're above the dashed line, that's positive. When we drop below the dashed line, that is negative. Currently, we are above the dashed line. Then we have an intermediate term rainbow going from 50 periods up to 100. We are currently above all these plotted moving averages as well, and we can just get an overall idea of what is happening within the trend. Ease of movement, I mainly look at the 14 period. When we're above the 0 line, that's positive. When we drop below it, that is more negative. And then I take a 20 period simple moving average of the open, high, low, and close. When we're really trending, sometimes these areas will act as support or resistance. We've been able to climb above all of these areas currently. Then a thing called the boom indicator. Price has a tendency to not get too far away from any kind of moving average. We have a 20, 50, and 200 period moving average on this chart. When we start to get too far away to the upside or downside, that gives us an extreme reading. Right now, we're looking more positive and not extreme with the 20, 50, and 200. This chart looks mainly at support. We are above this anchored moving average going back to the all-time high. If we start to fall, we are looking at support at about the 40.79 level. We also have some other confirmation that at the 40.80 level, there is support. So we watch this, but right now we're well above the moving average, so I didn't include it in very many of the videos. This chart just simply measures how far are we above or below the 200-day simple moving average. When we are green, we are above the moving average. We're also well above the 50-period moving average. I plot both a simple and exponential moving average on this chart. Sometimes this can offer support. In the past week, we came right down to the exponential moving average and we're able to bounce up off of that. As long as we're above this, things are more positive. Also, we do the same thing with the 100-period moving average, but we haven't come down to that level in a while. The mass index is used to generate some kind of a change of trend signal. We really only pay attention to this when it goes above the red dashed line and the blue line, and we're quite far away. So right now, this is not giving us any kind of a signal. Bollinger Bands, we're getting near the upper side of the Bollinger Band, but we haven't exceeded that yet. When we're above the midpoint, that's positive. When we're below the midpoint, that is negative. This is the percent B indicator, which measures how far away are we from either the upper or lower band. We're going up and looking positive, but we're not getting an extreme reading right now. Ichimoku cloud, a place to look for support or resistance. When we're above the cloud and fall, that's support. When we're below the cloud and going up, that could be resistance. We're quite a ways away from the cloud right now, so I'm not using this as part of our analysis. Standard deviation, how far are we getting away from the standard or average price? And we're actually dropping a little bit below as the market has mostly been chopping sideways recently. This is a point and figure chart. There's nothing new on here. When we go up a certain amount, an X is drawn. When we drop, a 0 is drawn. In the past week, nothing new was added here, but on May 18th, we did have a double top breakout, and that is more positive when looking at this chart. We also look at the S&P 500 stocks that are above their 50-period moving average, and even though we've been going up over the last few days, we've seen this dropping off a little bit, even though it's improving slightly. We want to see this get above 50 and advance and get up into this upper area, but we're just not seeing that. So that is showing us that there's not a real broad participation in the upward movement that we've been seeing. We do the same thing with the mid caps, where we're also seeing a drop off, but a little bit of improvement. We want to see this really going up, and we're not seeing that. And the same thing can be said with the small caps, even though we're showing a little bit more of improvement on this chart. Then we take a 10-day average of the S&P 500 highs minus the lows. When we're above 50 and advancing, that's positive. Below 50 and declining, that's negative. We can also use this like an oscillator when we get extreme positive or negative. Now, when we get extreme positive, we tend to use this also as a momentum indicator because it can come up and stay in this area for quite a while. Right now, we're far away from that, so I haven't been using it in the videos. Longer term charts. This is a long-term moving average study. We have a 50 period on the top. That's used for reference. And then a 150 and 200. When we're below this 250 level, that's negative, but we are showing some improvement on both the 150 and 200 period simple moving averages. Here's a long-term moving average rainbow going from 50 periods up to 250 periods, and we're above all the plotted moving averages. So this is more positive overall and helps us determine the long-term trend. We also look at the percent of stocks in the S&P that are above their 200-day simple moving average. This is dropping off a bit, showing not a wide participation in the upward move. When this is advancing, that means things are more positive. When it's declining, that's more negative. We also look for extreme positive or negative readings, but we're far away from any kind of a signal right now. Then we look at the broad market as well. This is the Vixen, which is the VIX for the NASDAQ 100. I usually say that I don't use this chart all this much because there's all these icicles sticking up on here. It has a lot of erroneous data. If I look at something, it's the line chart down below, which is the closing value for the Vixen, where volatility has really been dropping. It picked back up and then is pretty much right on its moving average currently. Some rate of change charts. This goes back 250 periods. We show that we're above 0 even though we're declining slightly overall. Then another look at that same chart shows that we are above 0 and showing some improvement. We can go back all the way to 1980 to look at how this chart is performing. Looking at bonds, this is a chart of the euro dollar, which is dollars outside of the US. It serves as a good proxy for the Fed funds rate. And then we compare that with the 2-year yield, which is the green line. And these tend to not get very far apart from each other, and they also go in the same general direction. This really doesn't tell us anything that we don't already know, but it's still a good idea to keep an eye on this. Then we look at the 1 to 3 month T-bill, which you could call cash. That's what you would have just keeping cash on you right now, not necessarily generating any interest. Or if you do, it's a really small amount. And then comparing that with a 3 to 7 year bond. We're seeing a little shift in this chart. When this chart was going up, that shows that there's a lot of uncertainty about interest rates. And that's more of a risk-off posture because interest rates are going up. Then recently we saw a death cross in this ratio and it looked like things were starting to shift. But recently, and probably due to the debt ceiling issue, this ratio has been going back up, but it's still in an overall downtrend. We also look at TIPS, which are Treasury inflation protected securities. If we're in a rising interest rate environment, folks want to own those because they adjust. Once they mature, you can re-up with that bond and get a little higher interest rate. So the TIPS tend to outperform when we're going up with interest rates, but lately we've been seeing this really start to decline and subsiding, which means that inflation worries are starting to decrease overall. Then we look at the 3 to 7 year bond and then compare it with the S&P 500. When this ratio is going down, that means bonds are underperforming, which you can switch to say the S&P 500 is doing well. Then we ran into 2022 and we were really choppy, where overall bonds were outperforming stocks, even though bonds had a terrible year in 2022. Now we're seeing a death cross in this ratio where bonds are starting to underperform and this ratio is continuing to drop, and that could be more positive for stocks. Then we look at the SPXInvesting index. First, we look at the VIX, and that measures the at-the-money options to generate some kind of a volatility measure. The SPXInvesting index looks at out-of-the-money options to see how they're moving. We typically only pay attention to this when we're getting up to this red area or dropping down to this blue area. We're going up a little bit, but we're not getting any kind of an extreme reading. And then just to give some context, we also compare it with the VIX, which continues to fall overall. So thank you. I hope you found this helpful. Please feel free to check out the other videos that I post. I hope you're having a nice Memorial weekend, and I will talk to you in the next video.